But if you want to be happy and safe, as much as we don't have it here, it's just purpose of and then you take profit. But if you don't want to get in here, you can wait for the market to come down to this point and instead to somewhere. Once you get in here, the higher the chance that the market will reverse and to your direction. Always remember, when you approach the market, you need to understand the direction. Okay, once you understand the direction, everything is and not also forget that the market is still going steady. It goes up, it comes down, it goes up, it comes down, it goes up, it comes down. So what you have to do, you have to pay attention to what happened as the market was moving to. So looking at this scenario here, you can see that the market gave us a support here, and then your support, and then it went all the way up. If you look closer here, you understand that was broken, it was never tested, there's one, there's some. Now, as the market was going up, we reached this level, and then now you can see here, middle candlestick that shows that we have used why to your left side, your left hand side here. If you go to other time frame, get a big expansion, let's push the market down. It's here you got someone that was broken, but never tested the distance, so tested the we have support, so we are going to that was broken because never tested this watching as someone therefore the market is coming down to someone. So whenever you analyze, you need to understand these things. Whenever you approach the market, you must know that, okay, fine. I can see that my market is pushing to the upside band down from you only get this higher time frames. So what you're going to do then, the time frames to check on other time frames what you want to get. So here is monthly chart. On monthly chart, this is your brain structure. Here, support was broken here. It's tested as what as the resistance as much as the market penetrated immediately. Because what they know that whenever you're trading someone's resistance, you need to pay attention to what happened before the breakout. So if you check here, before the breakout, they left this continuation pattern. That continuation pattern that you see, they contributed to push the market a little up to that continuation pattern. Okay. So whatever you do, you need to pay attention to your left hand side so that everything becomes easier for you on your right hand side. Now you can see that the market went up. If you apply your line chart like this, you can see that chart. Okay, you can see that okay, if you apply the line chart, just get the ring structure here. Just get your ring structure here. This not the only system. If you were to check, we have nothing here that shows up. Okay, change. The only thing that you have here is the number spoken short. Someone yesterday asked how to get the take profit. What I do, I use my left hand side, as I can see that there's a break structure of it was support, it was broken, and then came the resistance here. Now, if I got just to get in here, where was I going to get it? Because of now the market comes to support and then it goes to the upside. I don't care how the market's gonna move. This is where I'm and right now, if you'll be looking at this pen and then you think of jumping in here, you're not gonna be safe. Already you had it, your entry was supposed to be on the continuation. That is why I keep on saying whatever you do, guys, don't start analyzing on smaller time frame. Go to higher time frame and check the direction of the market. And then after checking the direction of the market, you know what to look for. Let's move to the chart. 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 On weekly chart, you can see that the market went all the way up. All the way up. The reason for the market to 10 days is based on our left hand side. So our left hand side is what we have that pushed the market down. And before we go down, let me go back and erase everything and add something that is one. What else do we have here? Trend line numbers. Now, whenever you see the trend line numbers broken, it gives us hope that the market will come back to this level because of our trend line was broken. Those who know how to use trend lines, they know what we here. So our trend line was broken. It means the market will come down to this level. The market will come down to this level. And also have chances that the market before moves to the upside might come down to the trend. But we'll find more information as we're gonna be going down the time frame. So let's move back to weekly. Let's move back to our chart. The trend line was broken. As the trend line was broken, now we know what to look for. We're expecting the market to come back and test the trend line. If you look closer here, this is weekly chart. This is weekly chart. As it is weekly chart, what else we got? A rally base, rally before the breakout of the trend line. Let's highlight the base. What does that mean to us? It means traders that are trading trend lines, they'll be waiting for the market to come down to this trend line. It means traders who are trading continuation pattern, they'll be waiting here. But now the challenge is this is weekly chart. This is weekly chart, so it is very much big. So what you can do, you can move to smaller time frame. You will notice that here you got your resistance. Remember, I mentioned in my link that whenever you are using support and resistance, you need to get 2 touches only. If it has more than 2 touches, you're not gonna use that one. And if it has 2 touches, they're higher the chance that they're gonna break down the resistance more than support. So here you can see this is weekly. If you go roughly to 4 hour, 1 hour, you will get the resistance that was broken and it was never tested. There's someone. So they're higher the chance that the market will come down to this level. And then it will reject and go up. Why? Continuation pattern is matching with a trend line. It's matching with the trend line and both agrees with the direction. And again, the direction you're gonna take here will be corresponding with the direction of the higher time frame. So whatever you do, guys, it is very much important to understand the direction of the market and take trades that are corresponding with the direction of the market. Because of if you will assume that the market will continue moving up, whereas the market will go down, it's a loss that you're gonna take. So for you to be safe, for you not to take unnecessary losses, start from higher time frame, check the direction of the market, move to smaller time frame, look for entries that are corresponding with the direction from higher time frame. That's gonna be simple. Even if you to take losses, your losses are gonna be very much small. All right, let's move to daily chart. Let's move to daily chart. Right now on daily chart, we don't have much information, which is fine. But I'm going to do time frame. Or before I move to smaller time frame, what I can do, I can just get the trend line here. You can see that they are breaking that trend line, right? If you're looking for an entry, wait up until they go down to this level. This is daily chart. They will come down to this breaker structure. And this breaker structure, when I use the line chart, let's use the line chart. This is your support. Comes from the left side. Area support. If they break this trend line, they are coming down to this one. And after coming down to this one, tested this one as someone, they will move back to the trend line. Why? Because so many people assume that now it's time to buy, or else it is not a buy here. The market is just pulling back, and then it continues to the downside. This is daily chart. And if you fail to be patiently enough to wait for the market to come back to this trend line, you'll take losses. But again, that will be determined by the pattern or the strategy that you are using. This information is for those who are trading trend lines and support and resistance. If you are not using any of these, therefore, you can use your pattern or your strategy. I repeat, entries that you're gonna take in the market will be determined by the strategy that you are using, determined by the patterns that you are using as well. But if you are using trend line supported resistance, you know what is going to thank you. For an example, let me erase. Someone might look at this one and stand therefore supposed to be support the market is go up. What about the trend line? Already the market is within the trend line, struggling to go up and down. So hence I said what you can do here to be safe, wait for the market to break and go down. And after the market decides to go down, don't jump in and sell. Wait. If you are trading supported resistance, you're gonna step in here and buy. Market go up, where is gonna be your exit point on the broken trend line. Those who are trading trend lines, they're gonna step in and towards and sell. And after you step in and sell here, the market will break this support and continue to the downside. Remember, I know for a fact that you guys are used to this information. And how can I say it? So I know that you are used to getting the type of information that says the more touches we have on the support, the more touches we have on the resistance, the stronger the level of which is the opposite. That is why we have so many people who don't believe in support and resistance, because of they use that information and still take losses. So according to my experience in the market, the more touches we have in on that support or on that resistance, it is the more it loses value. The more touches we have on that support will lose value. The more touches we have on that resistance, the more that resistance is losing value. Therefore, it might be broken anytime. If you notice, for an example, let me try to explain this thing in a way that you guys go to understand. Here is the support, market goes up. Only few notice this touching. They manage to get in. The market comes back. Almost everyone is expecting the market to respect the support. What they will penetrate the support a little bit like this, and then they move to the upside. Already, if I open my chart, I notice what they did here. I'm gonna get in somewhere up there. I'm expecting them to break the support because if they gave us a signal that we're gonna break, we will come back to this level. Why? It's an attempt to break, but they fail to break. Some will say it's a fake out. It's fine, you can even say that's no problem. But I am not gonna go deeper on that. So here you can say that okay, they respected the support, went up, they came back to the support, knowing very well that so many people waiting for the market to come back to the support so that they can buy. So that's why they will penetrate a little bit because of people. It's their stop losses just right. They will push the market to your stop losses and then they to the upside. Already when I see this, I know that you're gonna break this level. Let's break this line. Let's assume this is up one. And come with the hammer and smash again. The wall will start cracking. When you come back for the third time, chances of the market, the chances of the wall being broken are very high. Break one. Start hitting here again. Now the wall is no longer strong. You hit again. That's how I use some content instance. And guys, this thing that I am talking about here, you can go and verify. You just see this out there. You just see the same thing. So you can really be this. You can see still on the channel. Try. If you touch the first time, market went up, can close and up again. Take your trend line, trend line back to the sun. How many touches went back to the trend line? That's my entry. If you are about to trend line, that's your entry. Know that they're gonna break this. Okay, what so, so if I use support and resistance, I'm only gonna focus on two touches only. If it has one touch, I'll pay attention to the second time touch. If it has two touches, I'm not gonna pay attention to that support because of I know that the chances of them breaking that support are very high. Let me show you another example of what I'm talking about. If you close up here, is your spin. It penetrates at the resistance. They have to continuation. And as they were coming back to that continuation, so to that resistance that was penetrated, they gave us a continuation. And then they came back to test to confirmation. and resistance, they'll be stepping in towards and buying. Those who are trading continuation pattern, they will do the same thing. They will step in towards and buying. So it means most of the traders in the market the same interest. Then that's what you have to do. So everything is know that okay, from here the market went up. This is the chart. That means the green candlestick that you see here was the next thing. Now let me erase, touch another thing. So this is the trick that caused so many people not to become profitable. Is your resistance, right? The market came back to that resistance, but they decided to penetrate the resistance. And said, I'm only focusing on two touches when I trade support and resistance. So once I see this penetration, when I see this kind of, I know what to look for. I have to focus on this trend now. I have to focus on this kind of trend. So if I come back and check here, I notice that there's a continuation pattern. Okay, fine. What I'm going to do, I'm not going to buy this one. I let the market go up. Notice that they have broken this resistance. They also left a continuation pattern. So what is our expectation now? Our expectation is for the market to do whatever it wants to. So we know resistance. Now, as we got a new resistance, the market is coming down. Where are we supposed to be looking for our entries? Here. Why? We have this resistance and this continuation pattern. Let's go back to the candlesticks now. Now, if we go back to the candlestick, I'm on daily chart. It means each candlestick that you see here represent full 24 hours. So this continuation pattern was created for 24 hours, right? And then they push the market up again another 24 hours. And then they decided to come back down to the broken resistance. That was another 24 hours. What will we do? Come down to this continuation pattern. That's the reason why you find so many people taking losses in the market. It's because of they want to be opportunities. And already you can see here that you don't have any opportunity besides this resistance. But by looking at the size of the candlestick, you start feeling like, no, it's a buy. You start buying, the market comes down. You're like, oh, flip, I was not supposed to buy. Now you have anger, you want to gain the money that you just lost. You start selling. So many losses that you're not supposed to take. If you decide to wait, now after you have done your account, you start realizing, oh, flip, I was supposed to wait for the market to come back to this level. So but kuyafana sekulate. Let's go extra mile. If you check here at your trend line, it will be like this. So you have more information to use here. You have trend lines that was broken. What? I, which is this one, support, or just say resistant, support that was broken. It means we look for buy. We have PCP that represents what? A buy. So we have to make sure that you find opportunities. You don't have to find yourself going against the direction of the market. Uyabona ukuthi ama-pattern engiwasebenzisayo ku-market wonke ahlangana endaweni eyodwa. Shoda i-pattern eyodwa of which is supply and demand. Ama-patterns engiwasebenzisayo ku-market. So if you can see here, which okay, fine, shoda nge-pattern eyodwa is not. The reason why I'm sharing these is because these patterns are very nice. They are also part of price action. And they become strong if you combine. But it's not always where you're going to find them like this, aligned like this. But if you find them aligned, you know that they're going to a magic point. Okay, fine. Continue moving to the upside here. Come again here, you notice that if you go into my chart, trying to emphasize on what I said when it comes to the touches, when you're trading supported resistance. How many touches you got? I'm still in the chart, yeah? How many touches we got there? 2 touches. Resistance here, resistance here. It was push the market up, they push the market back to the breaker structure. Let's go back to the candlesticks so that you can see. If you closer, you can see here, this is your resistance. Resistance, it was broken. Push the market. Just like that. So guys, whatever you do, don't just rush to buy just because of what's going to happen. Pay attention to everything. Pay attention to everything on your screen. And then you know that when you take a decision to sell, you know that the market is moving to that direction. For an example, right now, the market is coming down. But that doesn't mean that you have to sell. Wait up until the market gives you the signal to sell. Now we have a new support here. Hence, I showed you that whenever you're trading support, you pay attention to the touches. Right? This is the first time touch of the support. I'm expecting another touch of this. So whenever you approach the market, don't rush to buy just because of and then here we have one structure and then it's continuation. So for today, what we're gonna be doing, pay attention to this from our chart. Then this one. What we do, pay attention to this chart. First time touch, second time touch. This continuation as I said, where the market is going, wait for a full setup. Let's go. Okay. What is presented to us. Guys, Uma will go to the chat now here. The market deliveries. Move to the left hand side and find out why happened so that it will be easy for you to understand. So let's verify what was the cause for the market to take comes from the left hand side. So now you know the setup. This is your touch, then it's going to touch. So let's go down to the time frame to see what is our chart. We have to focus on the second time touch. Touch, just to find something that will be corresponding with the direction of the market. This is the line chart first. The line chart. It's fine. Let's go back to the time frame on our chart right now. Our chart is also showing the continuation. So let's move the time frame to our chart. Guys, feel free to go through all the time frames. Don't just use one time frame and feel like that. See, go through all the time frames just to see what is happening in them. Take your time, go through the time frames just to look for things that you are not going to see. So here you can see on 2 hour we have a support level. On higher time frame we have a continuation our chart right now. So what I'm going to do, on 1 hour chart, there's the trend line up there. There's the trend line up there. There's the trend line. There's the first time touch. There's the second time touch. The trend line up is from our chart. So here we are on 1 hour chart. This is the support. So according to 1 hour chart, this is what happened. This is 1 hour chart. The market was going up. As it was going up, it came down. Why? Don't mind the spikes. The market turned accurately on this. See that? This is when the market turned. Now the market went up. If you are on 4 hour and 3 hour, this is the continuation. So now the market went up, it came back down. Why did the market turn here? It is the previous structure on the left hand side. So the market came back down. What is it we have? A new support. The market came back to the support. How many touches we got on the support? 2 touches. I said according to my experience in the market, when you are trading support and resistance, you need to pay attention to the touches. You're going to get on that support or on that resistance. Therefore, here I already have 2 touches. So as the market will be going up to the trend line, when we come back, we're going to break the support because it already has 2 touches. Guys, it is not always where the market's going to just break after receiving 2 touches. Sometimes the market will go up. But if the market goes up, I'm not going to give because I pay attention to 2 touches. If the market reverses from that support that has 2 touches, you're not going to find me buying on that support. You're not going to find me selling on that support. Okay, now we want to find out that what else do we have on that support that this is 1 hour chart. See the touches of the trend line. So what we go to do, I can see here, I said yesterday, we have a continuation pattern. Let's go to 45. This is 45 minutes. If we are going 45 minutes, you can see that the market is creating a match here. So up came there. start adjusting. After jumping in here, jump in here. Trend line, and then what does that mean to us? It means we're not going to the trend line will be some. And then what else we got? A continuation. How many of you know? So here the market is moving up, right? Just go up and come down to this structure, and then it moves forward to the continuation. So what is going to happen is traders that are trading trend line will step in sell. Again, it means traders who are trading continuation patterns will step in sell. The higher time frame told us that. So whatever we do on smaller time frame, pay attention to the. Are we still together, guys? If we're still together, it's nice. You can even use your line chart here just to confirm that the market's gonna turn where specific. According to the line chart, it corresponds to the trend. Is it that simple, guys? Right. Now we notice that what is important for you is to learn to wait. What is important for you is to learn. Don't just be like, oh, flip. I'll make an example of what is causing people to keep on. Right now, if you're going to step in and buy here, do you know that the market can come down to this level? Step in and buy it. And if you're going to buy on this 1 hour chart, somewhere below. And now, if your stop loss is going to be somewhere here, and your take profit is going to be somewhere here, your trade's not going to make sense. Your trade's not going to make sense. And if it happens that you win it, the market goes against you, you find yourself losing it. Why am I saying that there is a chance that the market might come down? There's a trend line. Trend line. Trend line. See the trend line. It comes from the left side of which this is the first time touch of the trend line. This is the second time touch of the trend line. So if you step in and buy here just because of bear in mind that the market can come to this trend line. That's what it is. So the best thing you can wait for the market to go up, come down, whatever, and then it breaks. Once it breaks this trend line, it comes to this somewhat level. Don't worry. Wait for the market to go up. The trend line that was broken. It's going down. So whatever you do, once you do it, everything is not only any pay in the any pay in the market. The job now, let's say for an example, let's say for an example, and hence I said that the market is take that loss, wait for the market to after it already got a signal that shows that the market is again after the signal break. If we are trading support and resistance after the market went down, minor resistance say that's what you do. Wait, wait. It's for this. I'll give them to us. I know that we have people trying to trade for years, but they don't see the money in front of them. They know how to trade, but they know it's too late. You want to become a leader. It's a routine process. How to become a profitable in the market. Master the significant. Wait for the market to come to you. Trend line, whatever motivation. If the market breaks your trend line, don't cry. The market will go up, come back to the trend line. Your business will come out. Let's say it's Q2 and 4,000 plus. Because but now, because of you guys, don't trade head and shoulders. Don't trade support and resistance. Don't trade trend line to see trend line. Always hear people talking about this. Disciplines comes along with the strategy that you're in. Trend line, support, the first time touch, first time touch, after doing that, it doesn't matter how long the market's going to go. Up until the market touches your trend line, then that's when you're going to exit. If the market did not touch your trend line, don't exit. That is what creates losses in the market most of the time. More profitable just because of your get the huge gains that she's done this one from some time. selling the market. After you took your loss, you assume to buy. Start buying the market. See again the candlestick like this one. Start buying somewhere. So it continues to the upside. You start buying. After buying, you see a liquid. So what is important and what I will say, guys, here, understand strategy. That's strategy. That's it. And also all values information. Yes. As the market is coming down, now it goes up. Just start selling here as well. Up until the market comes back to the market. Sometimes they go down. Why? Support here. What is important is to understand and if you want to check the set but lagi na ako opportunity. Remember what I said earlier about supported resistance. Remember what I said about supported resistance. As I said to you guys, that when I just when I use supported how many touches we got into one, two, and I can get to the same resistance. Second time touch here. So when I say to you, focus on the touches. Understand now. You're out there expecting that it's going to be time. Then I need to wait for the first time touch. Now, again, we need a higher level. The first time touch, we need the second time touch. That's selling on the touch of the support. Yeah. And then later on, you're out there, you don't need support of distance. How much always put up a wire and expand because of information. For an example, today we have focused at on a higher frequency of the chain. We will show you support and distance chain. You with the touch start selling. Sometimes you sell. Yes, if you figure out you be excited later on. Wait for another setup of support or of instead to get the same. And now the support and distance you feel like always consider support and distance. Yeah, so cancel the support. And what is important is to understand support. I always say when I am live on TikTok, on live on YouTube, I always say if I show something, as already looked at the information they have. Let us avoid to go on to something that we also understand. As I said earlier, I think price action is very much. Goodness is price action is not the only information in the market that we take, but it's information you can use in the market. It's not the only information that will make you profitable in the market. This one is really based on 5 minutes. This is not the only information that will make you profitable. But this information that I am sharing with you is the simplest information that will make you profitable. It's not the only information, but this information is simplest beginning in like a masterpiece. Start working. So it is up to us to must approach a market to see and I would say this again. For people who like Chandler, you to understand, or if you start thinking about the first question that you're supposed to be asking yourself for what are you going to do? Strategy, which pattern you're going to be. Focus on the pair or on the strategy or on the pattern that you're going to use in the market. For an example, personally, I cannot trade using it. You won't find me talking about this. But I can tell you where the market is going. Share this information all the time. But I'm not comfortable when it comes to this. Market is supposed to go up. But before the market goes up, so but I can tell you the direction of the market. So I don't want to go up and down at the same time and take a loss. But one day I'll also share more information on how to approach those markets. Always remember, guys, always important to understand what you are doing. Understand what you are doing. Don't just decide like I am enough to buy a man of sell. Okay, for what do I wish to which support supporting is the same as so now what you can ask or what, how you're supposed to be asking is which one do you prefer to trade between support and resistance? Support. This is your support. This is your resistance. As I said to you guys, when I trade support and resistance, I pay attention to the touches. And again, I also pay attention to the direction of the market, where the market is going up, if the market is going down. I know that the direction of the resistance to the resistance, we come back to the support, we move back to the resistance, we come back to the support again, we come back to the test, but the broken resistance is same thing if the resistance the future resistance the market will come down with respect to the resistance. So it will be up to you how you want to approach support and resistance. If you are comfortable, you can break the structure and again, we have people who are even taking losses on the break structure. of which people are not supposed to be taking losses when it comes to structure, but we do have people taking losses because of people pay attention to whatever. So whatever on reconstruction, pay attention to whatever before they make this. Pay attention to whatever before they this is a trap. This is a trap. Most of the time you guys will call this. If you got my input somewhere, I mentioned it. Why? It's because of so many people notice that this is about I can structure, and then this is where you're going to now the market just spike. It's an unlimited point to figure out what is the motivation. How come it's when we talk about the failure, we talk about something that happened that was not supposed to. This one structure. Okay. Uh, okay. This one is a bit accurate. This one is and look, as I said, when a trade supported this, I pay attention to what? I pay attention to the touches, right? Touches. First time touch, second time touch. Yeah, the second time touch, touch in the support. And then I said to you, pay attention to what this information is available. Right? That's the over with they have. I would say wonderful and technical like but it's fine. So now if you look closely, I'm on 4 hour chart, right? This is 4 hour chart. Now if I'm on 4 hour chart, what would I do? Okay, I'm gonna show my number now. They're gonna still be here and say this left of us is just from our chart. Yeah? This one is for those who are checking on 4 hours. But if you are checking on 1 hour, your stop loss gonna be look at what they did. They penetrated this support. Sorry, this support after it was broken. They came back to test this one. So now someone saying, I come and tell you that according to my experience, you do not let me fake out. Why? On your left hand side, they left a continuation. Knowing very well that when I see a continuation pattern and a support, I know that my end is going to be like where people are placing their stop losses to where I am placing my entries. So that you can see. Right. Now, if I remove this one, it's just above. Now look at what the market did. Look at how it went. And then you're out there, you hear investment say, if I trade supported resistance, if I trade break of strategy, it's stuff. Know nothing about the continuation. So if you're out there, you decide that you want to trade breaker structures, always pay attention to what happened before the breakout. Let me find a setup where there was nothing before the breakout. And then you see that when there's something, this is what they do. They won't expect that breaker structure immediately. Instead, they will push the market up before it goes down. Why? For an example, if you those who are controlling the market, they are aware that so many people focus on this breaker structure. So as many people are focusing on this breaker structure, their question is how can we manage continuation better? So this is where they're looking for. And again, if you go to smaller time frame, this is where it's like so this is where they are supposed to be. So it's gonna look like this. Somewhere, somewhere here. What's going to you find yourself taking losses that you were not supposed to take. Siak Shire, not because of being shy, but because of the animals that you were. But Nyazu, which is because of shy, Tala before one. Our losses are there to help you. It's up to you to take our losses. What's it? I'm not sure if they understand the information I'm sharing here. Correct. Yeah, it's fine. All right. What I want you guys to understand again is uma uzongena kumarket, make sure ukuthi uyazi